they translate to trades. And we talked a little bit earlier in the week how you create a trade out of an idea. And I want to start today with you just walking through very quickly your process that arrived at a long US dollar trade, which, by the way, since we talked on Tuesday, is doing very well. So your process starting to work out already. But what was the idea that got you to long small US dollar futures?
Well, like we talked about on Tuesday, the general idea comes from the fact of where we are in the current environment. We did get a couple of numbers more recently in the last couple of days, right? We got some things that are a reflection of the I word right now, inflation. We had CPI data, we had PPI data showing that we have, pretty strong inflation going on in our economy. And it's not a surprise. I mean, everybody's been home for the past year. For those of you who started to venture out, pretty sure you see it already. People are out and about and doing things. Traffic has picked up. Prices have picked up. I mean, I just saw something a little while ago and actually retweeted it. This one guy said it's $500 to rent a car in Maui right now, but it's like $1,500 to ship a car from, here. I don't even know if that's true, but to ship a car from here to Maui, where are all the arbiters? I mean, because there's definitely probably an arb there, but in general, prices are higher. I've heard people talk about going out to traveling somewhere. We're back on our vacation idea, but traveling out somewhere right now, and it's hard to get a rental car. I mean, there's a lot of things going on because demand is coming back. People are actually coming back and doing things. So over the past year, we know that there's been a lot of changes within the central banking system as far as what's gone on with rates. Rates were big time depressed. Of course, that pushed the dollar down. Again, like I said, this is a risk because we are in inflationary time periods, which does depress the dollar. But I would venture to say that the trade idea stems from the fact that stocks have been on highs. And this would be interesting to, you talk about these correlations. Stocks have been on highs. There is an inverse correlation of the dollar to stocks. There's also an inverse correlation of the dollar to things like Bitcoin. And we've seen what's happened in cryptocurrencies. Yep. So the idea stems from, why not buy some of the dollar to hedge my overall situation with my portfolio, which is, whether it's stocks or different options. So that's where it comes from.
Love it. And yeah, that's what's really great about that is like, it's specific to you. I think a lot of people have the same idea as you, and hopefully a lot of people this week have had that long dollar idea because it has climbed substantially this week. But what's great about that is you took the approach of like, all these things are going on with stocks and cryptocurrencies, inflation and rental cars in Maui and all this stuff. And you spit out a long US dollar trade. I always think of, have you ever seen, we started talking movies, now we're talking TV shows. Have you seen Silicon Valley HBO show?
Never watched it. Yeah, but I heard about it, but I never watched it.
Okay. It doesn't matter. It's like it's a pretty funny show, but there's this one scene where there's like a tech CEO and he's like he's like the quiet genius type. All right. Like very antisocial, but like when his gears get shifting, he's like solving world problems essentially. Like the show makes fun of like a lot of types like that, the West Coast Silicon Valley billionaires. And they like these people come to him and they're like, we need some money. Like, what can we do to like get more funding, to get more money? And he's like sitting there and he's talking about like sesame seeds and cicadas and Burger King. And he's like, the cicadas are about to come to all these farms and where they grow the sesame seeds, and Burger King is going to need these sesame seeds for all of their and he's like, so we bought, sesame seed futures. They'll appreciate 20% in the next 6 months, and that's where we'll get your money for your funding. I only bring it up because that's like an extreme example of what you did, which is like, there's a couple things going on in the world. Stocks are at highs. I'm long stocks. There's an inverse correlation to the dollar. Cryptocurrencies also at highs. All these different things kind of pushing the dollar lower. And it spits out a very simple like, oh, long small US dollar futures. The same as this guy. He's crazy. He's crunching all these numbers. He's like, oh, we'll just buy some sesame seed futures. And that's how you take your idea to execution in the futures market. What's really nice is the cost to execute on your idea. And here we have a market that, unlike commodities like sesame seeds or lumber or corn
Yeah.
or crude oil, this is a low volatility market. And so a lot of people shy away from it because if I wanted to get 10 grand in exposure here, I'd have to pay 5 or 10 grand, and it only moves a couple, $50, $100 per day. Doesn't move very much. With futures markets, you only have to put up $182 in initial margin to get all of this exposure in US dollars. And it's why in Silicon Valley, the guy is going to futures markets, and that's why we're going to futures markets here, right?
Exactly. For all those reasons. And you touched on the commodities piece, which is another part of the thesis I actually forgot about for a second. But
sure.
Yeah, I mean, we all know what's going on with commodities. Lumber's, limit up or down on any given day. But the overall trend has been to the upside for lumber. Same thing with, corn and wheat, the grains, as if you will. Those have been on highs. So we've seen a lot of outsized movement to the upside in those. And of course, those are one of the reasons why I'm interested in this dollar trade, because of what's been going on. And just the idea of being a contrarian with regard to that too. Like it's interesting to me. So
yeah, it's on a standalone idea. It is intriguing because, like you say, all those commodities, if you're trading like the U.S. based products, which most people are, your corn futures, your crude oil futures, they're all priced in dollars, gold as well.
Yep.
And they're all near highs for the last, 12 to 18 months. And that inherently, as you buy those up, you're selling dollars. That inherently pushes the dollar lower. So it is a bit of a contrarian play. Also, if you are long stocks and commodities, this is a long trade in the SFX is a nice little hedge against that as well. So you got a lot of good things working here with this trade. The last thing is the entry and exit that coincide with your expectations. A lot of people ask this, especially in the futures world, because stuff can, given the efficiency, stuff can move, 50%, 100% relative to the margin that you have to put up, which is good if it goes in your favor, bad if it goes against you. Yeah. I always tell people, oh, Frank, should I wait for $50, $100, $150? Well, look at how the product moves and then set your entry and exit based off of how the product moves and your expectations. So what I say here, and I pose to you with the long SFX trade, is you've got a market that moves about 50 cents on a given day or $1 or $2 on a given week. Are you expecting to have this position for a day or a week or a month or even longer? And from there, you can set those expectations accordingly. What are you thinking about the time frame for this particular first futures trade, man?
That's a very good question. Now that you mentioned it, because obviously, and people should know this, as soon as I pull it up /SFX, we're gonna get the May, right? But May is gonna, not that this really matters, but May's gonna roll off. And I'm saying this because I could choose May or June right now, right?
Yep.
Even though most of the volume is in May, of course, it's the front month, but I could choose May or June. To answer your question, I would say this is, although I'm going to trade, obviously, those two near terms, though those are my choices. This is a longer idea trade, so that I do anticipate, I'm going to put it on, but then I'm going to roll, as appropriately. But I'm thinking initially the idea is a longer term.
Okay.
But I guess I would say I would expect, maybe a 1% to 2% appreciation within the next month.
Gotcha.
Like nothing crazy.
Perfect.
Because like we just said, it's a slower moving trade.
No, I think that is all. First of all, I love the way you walked through it in your mind, because that's exactly what people will do when they go to the SFX futures. If they want to join you in your first trade here, is like, do I trade the May or the June? The May is expiring in another a week or two. Mm-hmm. I would always say, no, unless it is expiration week, go to that active month and just look to roll it when expiration week comes up. So that kind of answers that tidbit. But I like how you lined up the fact that you're willing to hold this for a month or a couple months with 1% or 2%, because you, as a knowledgeable trader, know those two things work in tandem. Like 1% or 2% and a couple of months in foreign exchange markets, those jibe very well. Mm-hmm. And so I would say that we're looking at the long here around 144 for 1 or 2% appreciation, a 1 or 2 or 3 month trade here, a little bit longer term, I'd say we're looking for like $300, $400 this market to go from 144 up to, 147, let's call it that. And with that being said, in the futures markets, we are quick to get in and out of losers as well. So I would have the exit points on both sides, looking for this to move from 144 around there to up to 147 or 148. But if this market gets down to 141 or 140 even, this US dollar is in real turmoil, and we want to get out before the losses really start piling up, because we're hoping that your opinion, your ideas, Jermal, are greater than 50% in terms of their success going on into the future. But we always have to mitigate those losses, because if you're, hitting at a 60% rate, but we're taking $300 in our winners in SFX and $500 in losers, that math doesn't work out. So of course we got to plan the exits on both sides. But there you go, man. First trade, long SFX, looking to get out around 147 or 148 to the upside. If it gets down to 141 or the 140 even handle, getting out for some losses. I think we got a good one here, man. Historic lows for the last couple of years. A lot of stuff going for you in your first futures trade.
Yeah. And this is, people should definitely know and understand this chart shows us a big move, honestly,
yes.
Comparatively over time, because that's how impactful a lot of the things that we talked about with regard to this trade have been over this past year. So being aware of that, I'm setting my expectations in such a way that I'm not getting too carried away.